12/1, 2011. Merry Christmas to everyone. It's that time of year. One of the things that we are going to talk about this morning in pre-market futures market, pre-market futures market, um, we have almost been open 1 hour. The pre-market gap up list on the Nasdaq comp, gap open up right here, is not very big. No, not like we went through earlier in the week. Okay, and we've had economic data come out. We've had U.S. economic data come out, and central bankers putting all their money in together. But who led the way? Bernanke. And we had instructed that this kind of move was going to happen some time ago. Actually, in the last couple of months, we knew that at some point there would have to be liquidity injections in the system so that it didn't go into systemic risk. Now that that event has cleared us by, what we're looking at is the day after and where that public sentiment is. This opening morning, 1 hour open so far in the pre-market. And the gap open up list, look, not much of anything. That's also going to affect the pricing controls in the option pit. Okay? True story. And what will have to happen to get executed at 12.70 ratio, limit order out of this $600 call, and trying to squeeze this one for 28.90 on an exit right here on the 570s, and the 575 call for 12.17. That's this one right here on Google. There has to be an exit on this one. It would be, let's say, 29.60. However, by the time we're 30 minutes from that opening bell, pre-market futures are 1 hour and 30 minutes. And that's where the public model is thinking, well, what should I do today? And do I believe all the things around the world that had just come out in a very short period? And what do I do with all of that information that's coming my way? And how do I get through today making a market with the public? That's the training module, is you're constantly a buyer and a seller. You can't just be a buyer of something and be long all the time. It doesn't work that way. It works where you're equally a buyer and a seller all day. That does really, truly work. As far as the intraday debit profit structure, let it be known that today's trading is the day after all that great news around the world. Now let's take a look at the gap open down list. LULU missed earnings. I will be doing a special report on this company. The next one right here, FFIV. It's one that we make a market on. It's a narrow range one, but Amazon. So this is your gap open down list. And ever since that Amazon missed its earnings, once it makes its upside move, and that's what I mean, once it comes down and it does get support or any kind of gap, you always sell the gap if it gaps up. Because ever since Amazon had a problem with that earnings, that's still within that weekly trend structure. As far as, and what does that really mean? That means the weekly pricing structure of the name. long and short. Amazon.com. Watch the name for its, and here's what I want people to watch Amazon for. It will have, if the teeny contraction in the overall movements, we want wider ones. And you got pre-market volume of 15,000 shares. Okay. Now, when I take a look at Priceline, on the other hand, look what I got. Volume 100 shares. Now look at that bid and look at that ask. Do you know how to get in there on that? Bet you don't. That's why you need to come to the MMT Market Maker School so you can learn how to cross in this area and get out of this area, or sell this area and buy back this area. You got 100 share volume. This will affect the options that people hold in the option pit, which we have a pricing authority on it because we have it priced correctly. As far as the dollar increment pricing structures and controls in the options, particularly in the pit, it's going to be that wide. See, on this one, when we do, if you do those, they all have to be what drop down bids. Watch the upper end. If you make it up to the 497, 498 area, that's where you're going to have some problems. Okay? But I haven't looked inside of the MMT platform, but memory serves me correctly, 492.75, somewhere in that neighborhood, would be your first area, a major area. The downside to buy this thing, well, go down, let's say you go down 3 teenies and put a limit order, and that's called a market maker script. So take your system, go down, limit in 3, limit in your shares, and then also set a half a teeny stop market. So find out what that number would be, load that in your buy and sell transaction, and you will do quite well because you'll have your risk management stop already calculated and ready to go. And it will make your life very easy. Now, what you would want to do is just the invert in your application MMT, in your MMT platform, is you would go 3 teenies up and put a short out with a half teeny stop above it. Or that way it would just trigger you out. You can always make another market maker transaction right after that. However, because you can balance your book and you can say, oh, okay, well, I did it that way. All right, now here's my next decision. Because you're making this market between this public bid and ask. And I'm highlighting Priceline pre-market. And I'm letting people see what this bid and ask is. And then how do you make good of it? And how does the public take advantage of it instead of being taken advantage of? That's the most important thing. We want you to be able to get in here and sell and be a market maker. So I sell that and I buy it back cheaper. I buy this and I sell that higher. Okay? Low volume training. Low volume training. And how to trade low volume prints. And how to use the SMF platform to limit in with those scripts. Then you go down to 5 teenies. Slightly above it, have another order with another half teeny stop. And if it breaks out, go down 7 teenies until you get made. And when that reversal's there, just like we do on a daily compounded level, is make that market on those turns. That's what makes you selling this and buying it back cheaper and making money, and buying this on the low and selling it back over here and making money. And it's real fun to do, as long as you understand the stop management procedures. Stop management procedures. The most other important thing, MMTs, in pre-market, and you're going to open up, is we just want to make sure that this is featured. And there have been successful MMTs that have traded this and did very well in it. And you can take a look at the bid and ask spread. Okay, the ask is 488 and the bid is 485.23 to buy in pre-market on 100 shares. What do? You take the 485.89, that's the close. Hey, if that bid disappears, what you want to do is put that script, just as I've talked about in this video, and 3, 5, 7, and 9 teenies. Half teeny stops until you get to the bottom. Tell me, that's where you'll have a heavier volume entry and you'll make the bigger spread on price line. And that's it. Buying the options is going to be, oh, wait till you see the bid and ask and the price line options. info@stockmarketfunding.com. Highlight price line pre-market 12/1/2011. How to trade low volume. Reference library to the MMTs is Priceline Low Volume Trading. December 2011, day 1. The year is going to close out, and it's pre-market, and it's featuring Priceline. How to trade low volume. How to buy the bid and sell the ask. That's what this school is about. It's about this right here. And how you can do that with the public and come out ahead. And the program stop management called Program Stop Management, Stop Market Management, Entry Management, Volume Management, Exit Management, Profit Management. All right, this one's getting killed at LULU, so we'll be doing a special. Watch for the bottom of it. It will bounce once the sellers are out. Okay, so you can have one individual. You can have one individual give me the readings on it, and we'll deal with it. We're going to conclude it. However, we're going to end it low volume, bid, ask, learn how to make a market.